Hello and welcome. You're still tuned into this special budget programming on CNBC TV 18. A lot of announcements and taxation, of course, that is one important aspect to discuss. What it means for you as an investor, how does it impact your profits, how does it impact you on a daily basis? Let's get to that and understand more on the impact. Joining us today are Feroze Azeez of Anand Rathi Wealth, and we also have Rajeshree Sabnavis joining us. She's from Grant Thornton Bharat. Feroze and Rajeshree, thank you so much for joining in. Of course, we've been talking about that hike in securities transaction tax, the change in buyback taxes. Before we discuss those in greater detail, what stood out for you in the budget when it comes to personal finance and personal taxes? Rajeshree, let me begin with you, and then I'll come across to you, Feroze.
Sure. Thanks. Thanks for having me on this panel. I think if one would look at from a market standpoint, I would segregate into small investors, small and retail investors, and large corporates and the traders. Every effort has been made in this budget to essentially protect the small shareholders, and you've seen some of the announcements. In fact, are they go to the fundamental. The second is when we talk about investors, I think the serious investors would clearly look at the actual fundamental growth and the growth trajectory that we as a country are at. And some of the announcement that has been made, keeping in mind the global uncertainty and the headwind, tailwind, whatever you may refer to, I think that's something which we should be considering. And from a tax standpoint, the promise was made in terms of not too many changes, simplifying and ensuring that the smaller taxpayers face less compliance burden. I think every effort has been made in this budget to walk the talk.
Okay, take that
so
point.
If you want examples, I can quickly touch upon it, but I guess it's up to you.
No, of course. I'll come back to you on that example quickly. Rajeshree, let me go across to Feroze. Feroze, what stood out for you in the budget from a personal tax perspective? We did see securities transaction tax on F&O getting hiked. Do you think that would impact arbitrage funds and ultimately the returns for an investor there?
Yes, Sonal. First, let me touch upon the direct tax. I think one thing, if you're a viewer and if you're watching, if you're in the old tax regime, it is apparent to naked eye that you should not swim against the tide. There are about 74%, 73% of them have now moved to the new tax regime. If you are a part of the 26%, I think this budget is the last nail in the coffin for the old tax regime. And you should try and move to the new one at ASAP and not get into these small deductions because there was no tampering there. And the new tax regime is so lucrative that you shouldn't miss it out. That's point one. Point two, when it comes to STT, I think there are large implications, different kinds of implication of the STT. One is there's a key message. That's not just an STT change. If you read the para in the proposed bill, you will see it as we are trying to discourage the futures and options trading platform and the higher volumes which are there. It's not just about tax collection. How much tax do we collect in STD? 48,000 crores, if I'm not wrong. That will not materially change because of this tax change. It is a message that we don't want trading mindset capital market like the US. We want a more investor-friendly market than a trader-friendly market. That's why you see the traders are spoofed and they want to quit today and bring down Nifty by about 600 points. So it is investor-friendly, trader-unfriendly. That's one message. The second thing, if you see the nuance or the fine print, says that interest expense will not be allowed to set off against the dividend if you have borrowed to invest in the market. Again, leveraged market positions are also discouraged. So that's where I would like to stop. But there are larger implications to the futures and options on the derivative side. Since I manage a derivative treasury for a couple of decades, I probably touch upon a little in greater detail at that point.
Okay, I'll come to you on that in just a bit. Rajeshree, you wanted to give an example on how smaller changes have been made that could have a bigger impact. If you can touch upon that in a greater detail and the buyback tax that has been changed. Can you explain that to us? How does it change for retail investors? Because for corporate promoters and non-corporate promoters, we have different rates. What does it mean for a retail investor?
Sure. I guess, okay, until last year, what they had said is when buyback tax was introduced, of course, and when the change was brought in, they had said it would be taxed as dividend income. okay, in the hands of the investor. They have in fact cleared that, and they've made it uniform and said everything will now be subject to tax as capital gains. The only differentiation that they made is because the promoters are in a position to influence these decisions, there is an attempt, and there is clearly, that's what the announcement is, which says that the promoters will not only, there is an additional tax that is applicable to promoters as well. Now, of course, the rate of tax would differ depending on whether the promoter is an individual or corporate, and accordingly, there is an additional tax that has been imposed. That's one. Second, if you see, for the first time, if you see again the small shareholders. So here again, my smaller shareholders, very clear, it's capital gains. Second attempt has been made in terms of filing of these Form 15F and 15G. This is again small shareholders, mind you. Earlier, you would have to run to every bank, every company and submit these forms. Now what they're saying is all these smaller shareholders have to do is submit it to the depository, and the depository will then in turn submit it to the company. So here, cost of compliance and the headache of going across to so many companies is kind of cut down to a large extent. So that is a second move. Third, again, there is an attempt to, from a tax standpoint, if you are a small shareholder, again, there are certain filings which you can make. They have kind of made changes to the timelines within which you can actually go and revise a return. If you want to declare certain foreign assets, again, there is a revision that's been made. So all in all, it is more bringing in stability and also looking at the small retail shareholders and trying to protect, in a way, from the market vagaries, which if a few months ago, the entire STT, I'm not surprised, with the rate increase, because there was data that was available in the public domain, which showed how much of money retail investors had lost on account of trading in futures and options.
9 out of 10 investors or traders, I would say the word, had lost money in F&O trading. Take that point, and that is something that the ministry had also alluded to, the particular study. Feroze, you wanted to touch upon the derivatives bit, also wanted to understand some of the exemptions or the TCS rate cuts which have come by on LRS payments that are made. I just wanted to understand how are some of these factors going to affect your personal finances. You did mention it's time to move to new tax regime. Anything else that you think was a big takeaway from the budget this time?
Yes, so let's see. First, let me touch upon that 15H and 15G submission to depositories. Is of course something which is very good, but I was surprised when I read the fine print that it's applicable from financial year 27-28 and not the one which is coming by. So that's one thing which you should keep a note of. The relief to small shareholders and senior citizens with that form submitting to depositories is not applicable for the subsequent financial year, but 1 year later. That was surprising. That's one thing I thought fine print should be highlighted. Coming to the question of, from a personal tax standpoint, what stands out is certainly the fact that the buyback tax, I personally think it is beyond the point which I'm going to make is a nuanced point and not visible to naked eye. It is not about tax coming down for a retail shareholder alone. If the tax comes down from dividend tax, which was a flat rate, to 12.5% in the hands of the tax owner, there are two things which happen. One is the frequency with which buybacks were happening had become near zero. Now, when buybacks happen in the market, there's a kind of a market buoyancy which happens. Now, for example, if I'm a listed company, if I'm making profits like if my company's profits projected are 375 crores for this year, and if with God's grace, if I'm able to meet that guidance, the first question which the board will ask is how much to be paid back and by what form. If it is dividend, it does not impact market prices, but if it is buyback, it creates a buoyancy to the price. That company is extinguishing their shares by buying it back, increasing the promoter stake if it does not participate. So it is a great positive, buoyant sentiment for the NSE small cap 250 companies, especially because today the balance sheets are reasonably large. The reserves are too many. And that's why I think is the most important impact. Not the tax, but the frequency of buybacks, creating market liquidity for an FII, for a retail guy, tax efficiently.
Got it. Take that point. I have a lot more questions. We are completely out of time, so we'll take this forward some other day, I would say tomorrow, because we have a working day, a Monday tomorrow. But thank you so much for your initial thoughts, Feroze and Rajeshree. It was a pleasure speaking with you. And with that, we'll take your leave on this edition of Budget Programming. But of course, more will continue on the other side.